Welcome back. The Federal Reserve has been hacked more than 50 times between 2011 and 2015. That's according to a Reuters investigation. I want to bring in John Hilsenrath, Chief Economics Correspondent at the Wall Street Journal. John, good to see you.
Good to be here.
What did you make of this story? I mean, what does this say about the security of our financial system if the Federal Reserve got hacked so many times?
Well, you know, I think every major financial institution in the world, including central banks, including treasuries, are facing this on a regular daily basis. And it's especially alarming right now because, you know, we're dealing with an investigation into the Bank of Bangladesh's account being hacked with the New York Federal Reserve, and $81 million being stolen from that from its own account. Congress is now investigating, so it's an issue. I mean, it's been an issue for the Fed for years, but it's now coming into public light.
Well, obviously, this is a way of life. Do they have the right security in place, John?
You know, that comes into question. You know, as this report shows, they've been dealing with this for years, and they're going to have to keep working on it. I think, as I said, I think the bigger alarm right now is what happened with the Bank of Bangladesh. You know, everyone is trying to steal information from these central banks. The fact that they actually got $81 million out of the Bank of Bangladesh's account is a sign of it's evidence that there isn't enough security right now.
All right, John, let me shift gears to the economy. We've got the selling season, the spring home selling season underway. Low inventory has pushed home prices higher. Is housing the bright spot for the economy? We want to talk about what's going on this week. A lot of important economic reports coming out. And then, of course, there's the European Central Bank meeting this morning. So characterize what we're seeing out there.
Well, housing is a bright spot for the economy. You know, it's grown. We've seen residential construction adding to growth for 2 straight years right now. We've spent so much time talking about the housing bust over the last few years. People are losing sight of the fact that there is a decent amount of home building going on. It's off of a low base, but it grew at a 17% annual rate in the first quarter. So that is one of the engines of economic growth right now. You know, the area to look out for is in commercial real estate, where there might be too much building going on. And that's an area that the Fed has actually been a bit concerned about. Some officials are saying they need to be raising rates because there's a commercial real estate boom bubbling up.
Hey, John, conditions in complex markets can shift gradually and then all of a sudden, suddenly. It seems like we're hemmed to this slow growth period, you know, after 6 years coming out of the recession. Do you think the Fed could blunder if they do raise rates?
Well, you know, they've been looking very carefully at what's happening in markets, and to tell you the truth, I think they're a little bit relieved about what's going on right now. Take a look at the dollar. When the Fed was looking at raising rates, and this relates to the ECB, when the Fed was looking at raising rates late last year, the dollar was getting stronger and stronger. And now we're at a point where the dollar has actually weakened since early this year. We're in a moment where central banks are going in all different directions. The Bank of Japan might be adding to its bond buying programs. The ECB is likely to be on hold today. The Fed is likely to raise rates at some point in the next few months. And the dollar is pretty stable. So I think the Fed's kind of comfortable with where the markets are right now.
July, right? July would be the raise.
Well, that's what the expectation is. They see how the Brexit vote goes. They signal at their June meeting that they're moving towards a rate increase, and if the coast is clear, they move in July. Well, of course, if we get really strong jobs numbers later this week, they might decide to just go ahead and move rates up in June. It doesn't look like the Brexit vote is going to be a big shock to markets at this point.
We'll see. I mean, we'll see the way it goes. Yesterday we had Wilbur Ross on, and he said it would trigger a major disaster for markets if, in fact, the UK left the EU. So we'll see about that. That could go either way. But we also have durable goods out. I mean, we know that businesses have not been investing all that much. So maybe all of these reports will go into that decision on whether the Fed raises June 15th is that meeting. John, thank you. We will see you soon. Have a great day.
Right,
John Hilsenrath.